don't know about you guys, but I have real estate whiplash. I mean, we started off the year with low inflation numbers, so interest rates dropped to their lowest since November. Now inflation is higher than expected, but still dropping, and now interest rates are back to their highs. I mean, we just found out conventional loans are going to be more expensive come April, and also now that they're going to be harder to qualify for. I feel like every other day there is just a brand new headline talking about how less affordable it is for the average person to achieve the American dream. And if you've been following this channel for a long time, you know that real estate played a super important role in my family's upbringing. You know, it definitely was a financial burden, but it was also the leverage that my mom had to build wealth and set her up for the future. And so I am very passionate about home ownership and what it can do for people's retirements, what it can do for wealth building. And so it makes me super sad to see that things are getting tougher. And so it would not be an understatement to say that I got so excited last week when I saw that HUD announced that it was dropping its mortgage insurance premiums for home buyers. This is going to impact people's monthly payments, or it's going to give you a little bit more flexibility in your home buying budget. And so if you want to find out how this impacts you, there's a free mortgage quote on my website, or you can call my team, or you can talk to your loan officer. And if you know of anyone who's interested in this information, I would pass on this video, because we're going to be breaking down what an FHA loan is, what the differences are in a conventional loan versus an FHA loan. And I think it's going to be really helpful in understanding if FHA is the right loan product for you. Now, if you're new to the channel, my name is Lizy Hoeffer. I'm a residential loan officer in Phoenix, Arizona. I've worked in mortgages since 2002, and this channel is all about teaching you practical money tips so you can make a smart home purchase. So I think a good place to start is just kind of explaining what an FHA loan is and why it might make sense for you if you are shopping for a home loan. But essentially, it's a loan that is insured by the federal government, and it was created really to provide a larger percentage of people with lower down payment options, financing for people with maybe lower credit scores or challenges with their debt to income ratio. It's a really flexible loan product that's provided to a lot of first-time home buyers. This was a dominant loan product in the recovery from the Great Recession because it allowed for people to qualify 2 years after a bankruptcy discharge, 3 years after a short sale or foreclosure, and in some special circumstances, 1 year after a really significant credit event. And so it was a great program that was very competitive up until 2018, when its biggest competitor, the conventional loan, came out with cheaper guidelines for mortgage insurance and got a lot more aggressive with their interest rate pricing. So one of the key differences since 2018 with a conventional loan and an FHA loan has been with mortgage insurance. And mortgage insurance is the monthly insurance or the upfront premium that you pay whenever you are borrowing more than 80% of your loan to the value of your house or your purchase price. So if you're putting anything less than 20% down, chances are you're going to be paying a fee either upfront or monthly or both, right, to finance that loan and to give the bank assurance that if you default, they're protected via, Freddie Mac, Fannie Mae, or HUD in this case with FHA. Now, one of the things that makes an FHA loan, or had made an FHA loan, less competitive is that if you were putting down 3.5%, you would pay an upfront premium with FHA to borrow from HUD, and you pay a monthly premium. But if you put down the minimum, you have to pay that monthly premium for the life of the loan. So that means until you sell the property and pay it off, or you refinance. Most people that get an FHA loan have the added cost of a future refinance. So that is something, that people don't like to pay for, right? And on a conventional loan, the rules were you have to pay it for 2 years. And if you can prove 25% equity or more after that, you could petition the bank to get an appraisal and have it removed. Despite whether or not you qualify for a conventional loan today or you qualify for an FHA loan today, there is a high likelihood that you will be refinancing because they anticipate interest rates to drop once we are in a recession and the Fed is doing things like buying mortgage-backed securities to bring interest rates down. Most financial analysts are saying that we're going to be somewhere in the low to mid 4s. And right now we are in the mid to high 6s, some cases 7%. All right, so if I were you, I'd probably want to know what the monetary differences are between getting a conventional loan today versus getting an FHA loan with the new changes. Now, this is just going to be an example because honestly, the new loan level price adjustments haven't taken into effect in April, and I don't know what the market will look like then. Also, I have no idea about your loan scenario, so I don't know your credit score, the number of borrowers, your debt to income ratio. I mean, there's a lot that goes into quoting a mortgage payment, but considering apples to be apples using pricing from today, I want to give you what the payment might look like. Okay, so absolutely not a rate quote, just an example for reference for your shopping. I hope I am so crystal clear with this. Okay, so the old FHA premium upfront and monthly of 0.85 on a purchase price of $485,000, which is the median in my area, looks like that monthly payment with an estimation of $50 in homeowners insurance and $141 in taxes. That monthly mortgage payment would be $3,572.24. Now, with the new changes, the new lower premium of 0.55, because they're putting down 3.5%, this new payment would be $116 cheaper, would now be $3,455.23. Now, if I was going to shop that same borrower, and just so you guys know, I did a $485 purchase price using a 680 as a FICO score for both scenarios. I'm using the same interest rate for both, right, of 6.625, which, by the way, again, is not a rate quote, just an example. On that conventional loan, that same scenario would be $3,580.16 because of the higher mortgage insurance. And this was with a 3% down payment, guys, and no upfront mortgage insurance premium. So the conventional loan is, I mean, it's higher, right? It's higher by, in this case, what was it? $116 plus $8. We're talking about $124 a month, which I think is pretty significant, especially now when we're talking about affordability. So I think FHA loans are going to be the new it girl when it comes to financing. And I'm really excited about this because $100 a month or $124 a month is somewhere between $20,000 to $30,000 of your buying budget, right? So this is pretty huge. And guys, the payment differences are pretty extensive depending on the FICO score and depending on other variable factors. So guys, I just want you to note that mortgage insurance isn't the only thing that's going to be impacting conventional loans. Come April, there's going to be a lot of changes in pricing due to debt to income ratio. There are going to be a lot of changes to conventional pricing based on loan amounts, occupancy, debt to income ratio. And so it might look like a completely different type of loan. And so I think the FHA loans are making a comeback. But I hope this video was helpful to you, especially if you're just new to the home buying journey. Don't forget to like, comment, and subscribe, and share this video with a friend that you know that needs this.